The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism.
Tonight, can Mark Carney's new Liberal government fix Canada's housing woes? Then, demystifying Donald Trump's crypto policies. That's all ahead on the agenda. Canada's middle class is being squeezed out of housing markets in Ontario's largest cities, affecting not only those people but local economies too. The federal Liberals say they have a plan to build hundreds of thousands of affordable units and are even creating a new Crown corporation for the task. But a lot needs to happen before Ontario's middle class can move into homes they can afford. To help us understand what's at stake, let's welcome, in the nation's capital, Mike Moffat, Executive in Residence at the Smart Prosperity Institute. He's founding director of the University of Ottawa's Missing Middle Initiative. And here in our studio, Leslie Wu. She's the CEO of Civic Action. And Leslie, we're delighted to have you back here in our studio. Mike, good to see you from the nation's capital as well. Let's get to this. Leslie, I want to know what hurdles to a strong economy are created when middle-class people like teachers and nurses or construction workers are squeezed out of the housing market.
Well, Steve, thanks for the invitation, and let's just humanize the issue. Anyone who has challenges affording a home means they're putting money and taking money away from their ability to improve their quality of life, their ability to afford their kids the right type of education, access to healthcare. All these things compromise our ability to have a good quality of life. And so if we aren't able to address the foundational importance of housing, we are definitely, doing a short shrift, because those who we're talking about, middle-income households and families, they have jobs, and 10 years ago, or maybe even less, they were able to afford, whether it's rental or ownership. And now they are rapidly being less capable. And these are folks that power our economy, that enable us to have the quality of life that we all aspire to.
Let me follow up with Mike on that, because I hear anecdotal evidence about this all the time, Mike, but you tell me how profound/widespread this phenomenon is. People who would like to work in the GTHA, but can't because they can't afford a home here, or don't even bother coming here in the first place because they can't afford a home here. How big a problem is that?
Well, it's a massive problem. I'd actually say it's existential for the GTA, that we are seeing a whole generation of these kind of middle-income workers. So, your nurses, healthcare support workers, administrative assistants, and so on, who just can't make a go of it in the GTA. So often they're leaving entirely, or they're moving to a community like a Brantford, Tillsonburg, or so on. They initially start commuting back to Toronto, and then they realize, hey, wait, Tillsonburg and Brantford need nurses and electricians as well. So it does create the conditions where you have these kind of chronic labor shortages in these middle income type jobs, and that harms everyone. It harms the quality of life, but it also prevents companies from expanding, because there are certain positions they just simply can't fill.
You're in the second biggest city in Ontario. Is it a problem where you are as well?
Yeah, not as much, but it is absolutely a problem. And, we are seeing folks move out to smaller communities like Carleton Place and Perth and so on. And it is leading to longer commutes. So it is also a quality of life issue for those workers, that even if they're still able to keep their jobs in Ottawa, instead of having a 15 or 20-minute commute, that's 40 or 50 minutes, which I know doesn't sound like a lot to the folks in Toronto, but in Ottawa, it's a relatively new phenomenon.
I gotcha. Leslie, what does it mean for the tax base and potential municipal spending when this group of people, which is the biggest chunk of people in our society, can't afford to live in the city?
Well, it's all interrelated in terms of, let's start with the most basic thing, which is, first of all, the city of Toronto, or most cities in the GTHA, rely on property tax base, which is home ownership. Yeah. Home ownership has now become less and less accessible to most people. 50%, when we're talking about the middle income households in the GTHA, that's 50% of the population, 50% of the households. So that's a significant portion that is at risk in terms of a municipal economy. It also means talent attraction and retention in terms of the ability of the sort of domino effect of your being able to live there, the use of restaurants, your ability to spend. And so municipalities rely heavily on these middle-income households to power not only the quality of life, but the economy itself. So this is a big challenge.
Mike, I'm sure you remember during the election campaign just completed that Mark Carney, when he was running for office, said he wanted to undertake a building boom of housing, the likes of which we haven't seen since the end of World War II. Do you like the use of that analogy to describe the challenge we're up against today?
Well, I certainly think it is that magnitude of challenge. I think we haven't seen housing shortages that are this large since the 1940s. So obviously that affects individuals, but it also affects cities for the reason that you described. So, you talk about municipal finance. I mentioned in Ottawa, all of those families moving out to Perth and Carleton Place and so on. Well, now they're paying their property taxes to Carleton Place and Perth, but they're driving into Ottawa every day and using Ottawa's infrastructure. And what that does is it hollows out the tax base of these large cities. And we've seen in the United States that has been a huge problem when everybody moves out to suburbs and pay their taxes to a different government. So hopefully with Mark Carney's plan, we can actually get more homes in cities, so that way the people who are using Ottawa's infrastructure can actually live inside the city of Ottawa. So, their revenues and expenses are all going to the same place.
And again, Mike, a follow-up to you because you are in Ottawa. We have heard the Prime Minister say he wants to create this new Crown Corporation that would be responsible for essentially unleashing an amount of home construction, the likes of which we haven't seen in 80 years. Can you give our viewers and listeners some idea of how complicated it is to create such an agency, how much it would cost, how many people would need to work there, what their mission might be, all that kind of stuff?
Yeah, so overall, we didn't get a lot of details in the platform, but they were talking about a number of initiatives, like a $25 billion fund to accelerate some of this housing. Now, a lot of that can be a little bit misleading because a lot of that is loans rather than grants. But overall, it's a lot of money, and it's going to be very difficult to do because you're basically, it's like founding a startup. So you're having to find people wherever you can get them from existing departments, come up with a new model of building homes. And the federal government here is going to be acting as developer. So not only are they having to figure out all the sort of internal bureaucracy, but the private sector is going to be the one who actually builds the homes. So this, at the end of the day, is a procurement issue. And we know that the federal government and most governments in Canada are not great at procurement, and there's not really that much fundamentally different from procuring a fighter jet, which we haven't been able to do in decades, and procuring apartments. So this is going to be an incredible challenge in navigating bureaucracy. Now, obviously with Prime Minister Carney, we have someone who's done that for most of his career, but I don't think we should underestimate the challenge.
Sounds like Mike is somewhat lukewarm on this effort. Leslie, what do you think the prospects are?
I'm probably closer to that category. I think let's just talk about scale. Right here in the GTHA, it's 1.2 million housing units we have to build. It's the equivalent, I think, in the GTHA of 600 billion that we have to spend over 5 years. That's think about this in comparison. The rapid transit expansion that Metrolinx has undertaken is a $6 billion a year, $60 billion effort. And so when the Canada Builds Home is, I think, the financing equivalent of $36 billion, it's a drop in the bucket. So they cannot do it alone. So over and above the challenges, and I've been involved in the setup of large organizations in terms of getting projects and infrastructure done. Not only are they the challenges that Mike is talking about, the money is probably not enough. Mm-hmm. And it's going to take provincial collaboration, municipal collaboration, because even if you had all that money, the capacity to deliver requires not just the capability of construction companies. It requires the ability for municipalities to clear the path, province to do its part, and all that is not easily done. The only example I can think of off the bat is Waterfront Toronto, a tripartite arrangement, and that was like 2,000 acres of land over, it was started in 2021 when a prime minister, a premier, and a mayor stood together, right, and had the community together. And even within that, it's been 20 years in the making. So this is not easy chops.
These are not easy chops, right? That's the quote of the day. These are not easy chops. Okay, Mike, you quite rightly point out that the government actually doesn't build homes. They have to incentivize the private sector to build the homes, private development companies. How would you say what's the best thing government could do today or going forward in order to incentivize builders to build? Because as everybody, I think, around this literal and metaphorical table knows, there's no building going on right now. There's no new home construction going on right now. It's pretty terrible out there. So what do you say?
Yeah, well, I think part of it is those economic conditions, and we do have to just wait and ride that out a little bit. But a lot of it has to come with sort of right-sizing our regulations. We've seen, we talk a good game when it comes to density, but we're not kind of allowing the sort of family-friendly density we need. We need changes to building codes. A lot of the great, small apartments that we love when we go over to Europe aren't legal here. We need to change that. I think one of the biggest things that we need to change is development charges and taxes, which can take up about a third of the cost of constructing a home in the GTA. That's far too high. They've gone up 1,000 to 2,000% over the last 20 years. We need to right-size those because the math doesn't work on a lot of these projects. After you pay development charges, community benefit charges, land transfer tax, and so on, you just can't produce a home at a price point that either owners or renters could afford.
But municipalities, Mike, will say we need those development charges. We need that revenue in order to pay for the services that the future homeowner will need. So if they can't get that money from development charges, where are they supposed to get it from?
Well, I think we need to take a holistic approach at all of the things that development charges pay for. So one of the big ones is water and wastewater infrastructure. There are other models to finance those, one of which was in Ford's own task force blueprint report about creating municipal service corporations to build these things and incorporate the extra, the building cost of water and wastewater into monthly bills, which can really lower financing costs. One of the big things we need to look at is how we construct roads, which is, the number one biggest line item that development charges pay for in most municipalities. It's never really made sense to me why homes have to pay for roads. Like, shouldn't cars be paying for roads?
Or drivers anyway.
So drivers. Well, exactly. So I think, I don't think the answer is just to kind of mechanically lower these, but I think we need to have a larger discussion around how do we pay for this infrastructure. But we should note that there are 10 provinces and 50 states in North America, right? There's 60 jurisdictions, and our development charges are higher than, twice as high as the next highest. So, 59 other jurisdictions have been able to figure this out in North America. So certainly, like, Ontario should be able to get some best practices, look at what they're doing in Alberta and PEI and Michigan and Texas, and go, okay, what are the things that we can incorporate into an Ontario context?
Leslie, in your view, the building codes, these other kind of jurisdictional regulation issues, how big are they a factor in this problem?
So they're significant, and I think part of the challenge is let's use the Greater Toronto Hamilton area. There's over 30 municipalities. Each one has a different view. It's unequal. It creates unpredictability within the system, which costs money. So I think there's a role for the provincial government in order to sort of think about the housing challenge as a regional issue to bring all the municipalities together. I also think that the federal government needs to understand that while all the levers that it needs to enable itself and its money to hit ground, it can't happen without the municipalities and the provinces right side by each. And in fact, those are all the barriers that any developer, private or not-for-profit, encounters It's like high friction in the system that we need to get rid of.
Mike, I keep hearing that quote-unquote modular homes are part of the solution here. I suspect that's a term that a lot of people still do not know what that means. So could you start by telling us what's a modular home and what does the sort of modular home supply chain and potential look like right now?
Yeah, so we have a number of these producers. There's one in Ottawa. There's a big one in St. Thomas, close to my hometown. And these homes can look a lot like traditional homes. But what happens is instead of the assembly happening on site, all or part of the assembly happens in a factory and then is trucked down. There's certain advantages to this. You can have, if robots are doing a lot of the jobs, they can work 24/7, 7 days a week instead of building on site. But these are not, people think that these are necessarily just trailer homes, which they could be, but a lot of times they are, 2 and 3 story homes with a foundation. They're just built in a different way. But some of the challenges just goes to what we speak earlier, that different municipalities have different regulations for a variety of things, and it makes achieving economies of scale here difficult. It would be like in the automotive industry if, Mississauga had a rule that the gas tank door had to be on the passenger side, and Brampton said it had to be on the driver's side, and Caledon said it had to be behind the bumper. We would never be able to assembly line cars. We'd be making them one at a time. But that's essentially the challenge with housing and these modular approaches, is that regulations are so different, even between municipalities. It's really hard for these companies to achieve scale.
Are these homes cheaper than a built-on-location home?
Currently, no, but the hope is that if these companies can achieve scale, they will become cheaper. Just like we've seen with solar power and wind power and so on, that there's learning by doing. There's R&D that goes on, and you can bend the cost curve as you produce more of these. We haven't hit that inflection point, at least in North America, when it comes to factory-built approaches, that they tend to still be as expensive, or in some cases more expensive than traditional methods. But if we start producing enough of them, we certainly believe that we can achieve cost savings that are 20, 30, or 40% more.
Leslie, if you want to achieve a goal, it's usually a good idea to set a target, and Mark Carney has set a target. He wants to build 500,000 homes a year in this country. That's a big number. Is it doable?
I hope it is, but I think there's so many conditions that have to be put in place. We just talked about off-site fabrication as one, the bylaws, the building code, the financing, the capital stack that requires not only public money but private equity and philanthropic efforts. There's a lot that has to be lined up. But just to put it all into perspective, here in the GTHA, if I use the number that CMHC has produced around the number of houses we need in the next by 2030, it's somewhere in the order of 240,000. In 2022, here in the GTHA, do you know how many we produced, Steve? 47,000. So we have to get, before we even get to Mark Carney's 500,000 across Canada, this region, which is one of the most populous, those numbers and our capacity to do it on the ground, whether it's private, public, or not-for-profit, is a big challenge. So it's critical that we pay attention to this, but it's critical that we actually work together. We, the royal we, work together on this, because no one government, no one private developer, no one not-for-profit can do it.
Mike, your view on the 500,000 number?
Yeah, I don't see us getting there anytime soon, unfortunately. We've never done more than 300,000 in any one year. So to go from 250,000, which is roughly the level we're at, and double that, I don't think is going to happen anytime soon. The upside is I actually don't think it's necessary. That some of the CMHC numbers they were produced before we made changes to immigration targets and international student numbers. So I don't think we're going to hit 500,000, but I don't think we necessarily need to put a dent in the housing crisis. But even 350,000, which I think we would need, is going to be a significant challenge. So I do worry that the Prime Minister has set himself up to fail a little bit, where we could make some massive transformative changes, get to 340, 360,000, which would be a massive win. But Canadians might look at that and go, well, you promised 500,000. Clearly this program's a failure.
Okay, in our last couple of minutes here, I should say, in the interest of full disclosure, my brother's a home builder in the Southern Ontario area, and I don't normally, the Leafs are in the playoffs. When we get together, we talk about the Leafs. We don't normally talk about his business.
Shocking.
But and it's not shocking. As it happens, we actually, for a few minutes, talked about housing policy the other day, because I knew I was about to do this discussion and was interested. And he did say to me, there's just nothing happening right now.
Correct.
Things are just tight as a drum. There is nothing going on. Leslie, how is it possible that we know that people want homes? We know that interest rates are not sky high. We know there is availability of labor. Why are homes not being built? Why are people not buying homes these days?
I call it random acts of kindness, Steve. We have lots of activity, people meaning well, but it's all fragmented and disconnected. And so that is one of we don't talk about that. We talk about, we've got 50 units here, we're going to do this little piece there. But we need to recognize that it is the scale of what we need to do requires a whole complete system approach. And so I think when I think about what it is that's going to get us where we need to get to, it's a lot of the work that we're doing in enabling different points of view to sit around a table, enough with the finger pointing about who's doing it right or not doing it right. Let's just really understand that this is a national crisis, it's a provincial crisis, it's a city crisis, and it's more than just about housing.
Okay, Mike, in the last minute, this obviously, all of what I've heard from the two of you today, will require some talent, some ingenuity, some political will, some preparedness to sort of put aside petty regional differences and really start singing out of the same hymn book. Mike, are we capable of that?
This is going to be a wartime-like challenge. I think the Prime Minister used the right term here, that we are trying to operate in the center of a Venn diagram where we're looking at, all three orders of government having to work well together, which is something we don't do we're having governments have to procure more in the terms of social housing, and that's not something we do particularly well. And finally, we also want to make sure that these homes are compatible with our climate ambitions, both in the adaptation side, but also, making sure that, we hit our emissions target. And we haven't really been great at climate policy either. So when we take, housing and climate and procurement and governments working together, 3 or 4 things we don't do particularly well, and say, okay, we're going to operate at the center of this Venn diagram. This is going to be a massive, massive challenge.
Gosh, you two, I was really hoping after 22 minutes on this, I would feel better about our prospects going forward, but I sure don't. Well, maybe this is a wake-up call, along with many other bells that are getting rung these days on this issue, and maybe they will listen. Mike Moffat, Smart Prosperity Institute, Leslie Wu, Civic Action. It's really good of both of you to join us on TVO tonight. Many thanks.
Thanks.
Thanks for having us.
After tariffs, policies around cryptocurrency appear to be a domestic priority for the Trump administration. As a presidential candidate, Trump vowed to make the U.S. the crypto capital of the world. But some of his moves in crypto and those of his family have left even ardent supporters of the sector recoiling. So what does the U.S. gain from Trump's crypto policies? Let's find out. We'll ask. In St. Paul, Minnesota, Richard Painter, the S. Walter Ritchie Professor of Corporate Law at the University of Minnesota Law School and Chief White House Ethics Lawyer in the George W. Bush administration. In Durham, North Carolina, Lee Reiners, Lecturing Fellow at the Duke Financial Economics Center at Duke University and a former official with the Federal Reserve Bank of New York. In Philadelphia, Pennsylvania, Tanya Evans, Professor at the Dickinson Law Faculty at Pennsylvania State University, where she teaches, among other things, blockchain, cryptocurrency, and the law. And in New England, Molly White, independent cryptocurrency analyst and writer of the Citation Needed newsletter. And Molly has been on our program before, and we should just say, as I welcome everybody, we are being somewhat ambiguous about where she is right now, because unfortunately she deals with a lot of harassment and security crapola. So Molly, we're just saying you're somewhere in New England, and we thank everybody for joining us. Let's start with this here. This is something, just by way of showing how Donald Trump's position on this issue has changed. This is something that Mr. Trump posted to Twitter in July of 2019. He wrote, "I am not a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and other illegal activity." That was then. Here now is a clip of Donald Trump speaking at a Bitcoin conference in Nashville 6 years later. This is last July 2024, about 4 months before the presidential election. Sheldon, if you would, let's have that clip.
Upon taking office, I will immediately appoint a Bitcoin and Crypto Presidential Advisory Council. Would anybody like to be on that particular council? Please raise your hand. Their task will be to design transparent regulatory guidance for the benefit of the entire industry, and they will get it done in 100 days. We will have regulations, but from now on, the rules will be written by people who love your industry, not hate your industry, people that want to make it clear and simple, straightforward and fair, people that want to see your industry thrive, not dive.
Okay, Tanya Evans, let's start with you. Any idea how or why Mr. Trump's policy or views on this policy have changed over the last 5 years?
Well, I think there's no question that his views have been heavily influenced by the amount of money that was injected into the campaign. And so you see this seismic shift from 2019 to the lead up to the 2024 elections, and certainly what we've seen him delivering on his promises in the first 100 days, to be sure. But I think we have to acknowledge the role that campaign contributions have in moving the balance of power across the board, and certainly with respect to crypto. And the fast pace of this last 100 days is undeniable. I think it raises a real question about the speed, the substance, and also the public purpose. But as we assess the policy shift, I hope that we don't lose sight also of what's at stake beyond his office to what's at stake for everyday people.
Molly White, let's do a little fact check here. That clip is from last summer. He was promising within 100 days to bring in regulations that would be written by people who loved the industry rather than hated it. Okay, we're 100 days into Trump's administration. Has that happened?
Well, he's certainly invited a lot of crypto industry figures to influence policy and to propose regulations that they think would be beneficial to the industry. In terms of actually instituting new legislation, that has not happened yet. There are various bills making their way through Congress, but nothing has been signed into law. The majority of what we've seen so far has actually been the removal of regulatory oversight for the crypto industry. We've seen the Securities and Exchange Commission, which primarily regulated the crypto industry previously, dropped the majority of cases that were open against crypto industry companies that had violated securities laws or even been accused of fraud. And we've seen instruction from the SEC indicating that they no longer intend to pay much attention to the crypto industry, carving out exceptions for meme coins and stable coins and various other aspects of the crypto world that they say are not under their authority. And it's essentially left a vacuum where no other regulator has been named as, in charge of overseeing that. So far we've seen very little in the way of new regulation or legislation, but we have seen the removal of the majority of what was in effect previously.
Let me get Lee Reiners on that too. What one thing do you think the president has done that has been most helpful to this sector so far?
Well, I think there's no doubt the most helpful thing is appointing Paul Atkins to run the Securities and Exchange Commission. And even before Mr. Atkins was sworn into office a few weeks ago, you still had a Republican majority at the commission, and President Trump had nominated Commissioner Mark Ueda to serve as an acting role. And As Molly said, the commission wasted no time in essentially reversing every single aspect of the previous administration's crypto enforcement program as it applies to securities laws. So, every single case that was brought has either been dismissed or paused. Every investigation has halted. The SEC has disbanded their crypto enforcement program. The previous head of that program got moved to the IT department. And again, as Molly said, the SEC has put out a number of statements suggesting that, meme coins are not securities, stable coins are not securities, proof of work mining, which is the process by which, new Bitcoins get created, is not a security. So essentially, the SEC is signaling that, really when it comes to cryptocurrency, securities laws do not apply.
Richard Painter, maybe you could follow up by telling us how you judge the differing approach the Trump administration is taking to this issue compared to the previous Biden administration.
I don't think either one of them were very good. The problem is the SEC tried to win some cases demonstrating that crypto is a security. It meets the definition of a security, but they lost those cases in the courts because we're dealing with a statute that needs to be amended. We need to add the word cryptocurrency to the 1933 Securities Act and the 1934 Securities Exchange Act. We went through this with securities-based swap agreements during the Clinton administration where they were unregulated. They weren't included in the definition of a security. They finally were added to the definition of a security in the year 2000. And then during the Bush administration, there were not adequate steps taken to regulate securities-based swap agreements. And we see what happened. We're going through this again with cryptocurrency. The SEC has been unsuccessful in convincing courts in most cases that cryptocurrency is a security. We need to amend the statute. Why didn't we amend the statute? Because the cryptocurrency industry has enormous influence in Washington. And this isn't just about Donald Trump. Sam Bankman-Fried and the Bankman-Fried family funneled millions of dollars worth of campaign contributions, mostly to Democrats, some to some Republicans. Barbara Fried's Mind the Gap PAC raised a huge amount in Silicon Valley. They had enormous influence. Bankman-Fried was testifying in front of Congress, advising Congress on crypto regulation months before he was arrested. He's now serving 25 years in prison. And what's happening? He's trying to get a pardon from Donald Trump. His father, Joseph Bankman, is making pitches to Donald Trump, favoring Donald Trump's sovereign wealth fund. So bottom line is, we have both political parties have been captured by an unregulated industry. And we need to get a handle on this. Congress needs to either add cryptocurrency to the 1933 and 1934 Act or set up an alternative regulatory framework. That needs to happen right away. But what do we have? Huge amount of campaign contributions, most of it to the Republicans this time around. It's very different in 2020 with the Bankman-Fried crime family supporting the Democrats, but now almost all to the Republicans. And what else do we see? We see the President of the United States and his family with massive personal holdings in cryptocurrency, talking about setting up a cryptocurrency reserve where they may very well buy their own securities.
Okay, to that end,
cryptocurrency, they're feeding a bubble, and this could be a cataclysmic impact on the economy if we don't get a hold of this now and figure out what's going on and regulate the industry.
well, to that end, let me get Molly back in here and ask her to tell our viewers and listeners what the World Liberty Financial Organization is.
World Liberty Financial is a crypto platform that was launched by various Trump associates, and it was entirely branded with Trump's, picture and his name and his likeness, essentially. During the campaign, the Trump family tried to keep somewhat of an arm's length relationship with that company, claiming that they were not, running the company, essentially, even though Trump was receiving 75% of protocol revenues. After Trump was elected and inaugurated, the Trump family took a majority stake in that company, sort of revealing the extent of the connections to, actually leading that company. company. They have issued a token called WLFI. They don't actually have much in the way of a business yet. They have announced what they plan to do with the crypto platform, but at the most part, or for the most part now, they're simply raising money via the WLFI token, and they have been pretty successful at that, at least since Trump won the election, because it has been viewed, I think, by many as a way to buy influence with Trump. We've seen people like Justin Sun, who is a crypto entrepreneur, purchasing substantial amounts of this token and then earning an advisory position on the World Liberty Financial team. Shortly after that purchase, the SEC case against Sun and his company was dropped. And so we've seen this company being used as a conduit, essentially, for contributions directly to Trump personally, not even his campaign, but to Trump and his family, who serve as both advisors and the financial recipients of a substantial amount of the proceeds that this company is earning.
Tanya Evans, how deep would your concerns about this situation be with you?
I think it's no question that when you have this intermingling of public officials and also private enterprise, underneath it all is an undermining of trust. I do want to say, I think it's important to understand how we got here as well. Richard certainly mentioned like the Grayscale case, the Ripple Labs case, Library is coming to mind as well. When you think about all of the losses based on arbitrary and capricious kind of overreach, and Gary Gensler's regulation by enforcement is a common term that we hear in our industry, as opposed to also promulgating regulations, using that delegated authority from Congress to actually promulgate the rules of the road. So that kind of set up this scenario where a ton of money flooded in to go in the opposite direction. But what I wanted to add on top of that is the SEC wasn't the battle between the SEC and the CFTC weren't the only things in terms of distinguishing between securities and commodities and a lack of agreement, but also the prudential regulators as well. Federal Reserve, the FDIC, the Office of the Comptroller of Currency as well. And I think that was kind of the perfect storm that combined with also the amount of money that floods in. And bring it back finally to the point that you made, when you have not only an elected official, but the one at the highest office of the land, it certainly presents a host of issues, not the least of which is the undermining of public trust of the government.
Well, I do want to ask Lee about that. Do you think the president himself, or more broadly, his family members, are being as open and transparent about their involvement in all of this as they ought to be?
Well, frankly, they're being pretty transparent. They're not trying to hide the ball at all. But I think we should all be very concerned. Frankly, we have never seen this level of conflicts in an American presidency. The word unprecedented gets thrown around a lot, but this is truly an unprecedented situation. And so not only is the president sort of combining his sort of public service with his financial interests, but he's really, opening himself up and the presidency to potential manipulation and frankly, bribery. With the nature of crypto is that, these things are anonymous, they're borderless. You can send, it's certainly a lot easier to send $100 million worth of crypto than it is $100 million worth of cash. And frankly, that's what you've been seeing. So now with this meme coin, there's going to be this dinner that's going to be hosted at President Trump's golf course outside of Washington. The top 220 holders of the meme coin, get to attend dinner. All the transactions with the meme coin, the president and his company gets a cut of this. And this is just one sliver, frankly, of what the president's been doing. It's frankly hard to keep up. Every week there's some type of new venture that's announced. The latest is World Liberty Financial now has a stable coin, and a UAE sovereign wealth fund is going to use that stable coin to buy a large stake in the cryptocurrency exchange Binance, which pled guilty to money laundering violations, and the CEO spent 4 months in prison. So, I mean, it's just staggering, frankly, what's going on. And I just want to push back real quickly, Steve, on something that Richard and Tanya said about the SEC's track record. Frankly, it was an incredible track record. And I submitted a 30-page statement about a month and a half ago to the SEC ahead of my participation in the Crypto Task Force Roundtable. And I went through case after case where the SEC presented the facts to a judge that said, look, we think these cryptocurrencies are securities. And judge after judge agreed with the SEC. So frankly, they only had one loss, and that was a partial loss in the Ripple case. The SEC was probably going to win that on appeal. You had two other judges in the same district court repudiate that ruling. The Grayscale case was an administrative law case. So, the SEC was right, I thought, on the law. Judges agreed with that, but obviously, elections have consequences, and Trump ran on being the pro-crypto president, and he's certainly, done everything within his power to make that a reality.
Richard Painter, how confident are you that no laws are being broken by Trump and or his family?
Not very confident at all. And my point about the securities laws is we need to add the word cryptocurrency to the 1933 Act and the 1934 Act, and not be having the SEC have to go to court and argue these cases under a 1940s case involving orange groves in Florida and whether those were a security, the Howey case. So we need to do that. Congress should have done that over the past 4 years. I wish the Biden administration had gotten that through Congress ASAP, but maybe they couldn't have, because the cryptocurrency industry has Congress bought, both political parties bought. And what we have now is a president with serious financial conflicts of interest. The problem is the financial conflict of interest statute, 18 United States Code 208, does not apply to the president or the vice president or to the members of Congress. This is a criminal statute, make it a crime for anyone else in the executive branch to participate in a government matter in which they have a personal financial interest. That would be a felony potentially under 18 U.S.C. 208, but not for the president. President supposedly can have financial conflicts of interest. Now, as I pointed out in an interview in the Daily Telegraph, we have never had a president with this serious financial conflicts of interest since we had slave owners in the White House. And I think we learned from our early years of our history of our country how tragic financial conflicts of interest can be. When you have people who have a vested interest in whatever financial system, whatever remote means of production, in the case before the Civil War, slave owners and plantations having the highest positions in the land, and the Senate and the House and the White House. And now what we have is an industry that could wreak havoc on our economy. And instead of regulating it, the President of the United States, his family members, and members of Congress and cabinet members apparently are getting involved in investing in it and trading in it.
Okay, I take your point here. I take your point.
Well,
let me get to Tanya Evans on if we wanted to create something that would stand up to greater scrutiny or would be a sort of healthier crypto industry, what would it look like that makes it different from what we've got today?
Well, I always, in many of my remarks, and Lee and I testified for the House Financial Services Subcommittee on digital assets some years ago and talked about this point as well. The rules of the road come from Congress. The delegation of their legislative authority is handed over to the executive branch so that the executive branch could execute those things on a day-to-day basis. Congress has got to step up for all the reasons that were just mentioned, and in order, as you said, to create the opportunity for cryptographically secure digital assets in various forms, from Bitcoin to stable coins to memes. There are thousands of different types of coins and tokens, and it's always challenging to have this conversation about what would be in the best interest of not just the industry, but the ultimate end user, the consumer, the small business owner, when we don't have a clear set of rules that has been mentioned to specifically identify digital assets. The legislation that has been moving through both the Senate and the House were in progress before this current 47th presidency. And it needs to, the allocation of resources is always political. It need not be partisan on these issues, but we need the clarity so that there aren't the gray loopholes that were mentioned in order to undermine the confidence, not just in the presidency, which is important, and those who are involved in the cabinet, but also and certainly for everyday Americans.
Molly, let me get you back in here and follow up on this path. So far, we've been talking basically about what national governments ought to be doing on this. What about at the state level? What kind of influence or inroads has crypto made at that level of government?
Well, we are starting to see a lot of crypto influence at the state level with crypto companies trying to exert influence on state level regulations. We're seeing crypto interests being pursued in various states, particularly with proposals recently to establish crypto reserves. We've seen several states trying to echo some of the promises that Trump made about establishing digital crypto or Bitcoin stockpiles. Legislation has been proposed in several states to do that. Most recently, we saw it make its way through Arizona legislature only to be vetoed by the governor. And so, we're starting to see sort of concerning adoption of crypto at the state level in ways that I think, much like at the federal level, don't clearly benefit the everyday citizen or constituent of those states.
I'm going to ask our director, Sheldon Osman. Sheldon, at the bottom of page 3, we've got a quote here, and I want to read this. This is from the April 2025 Financial Stability Report. It was published by the Bank of Italy, that nation's central bank and top financial regulator. And here's what they had to say. The strong growth of Bitcoin and of other crypto assets with high price volatility means risks not only for investors, but also potentially for financial stability, given the growing interconnections between the digital asset ecosystem, the traditional financial sector, and the real economy. Okay, Lee, let me get you in here because, of course, you work for the New York Fed, which is part of the U.S. central banking system. How do you see the potential of cryptocurrency run amok, I guess, potentially ruining the economy of your country and ours?
Well, I think that the odds of that happening are growing by the week, Steve, and Richard is right. I mean, we're sort of slow walking our way towards another financial crisis. And, the reality is that most people don't use or care about crypto, and I get that for good reason. But, the same can be said, about mortgage-backed securities and credit default swaps around 2008, right? No one knew about those or cared about those until they blew up the entire global economy, and then we did care. And so what's happening with crypto, not only is the asset class just getting bigger and more people are investing in it, but it's becoming more interconnected with the traditional financial system. So now we have things like exchange-traded funds, which are very common and well-known investment products in the U.S. BlackRock is the largest asset manager in the world. They have the most advanced ETF franchise, their iShares franchise. They're offering crypto ETFs. We have a publicly traded company, formerly known as MicroStrategy, now just goes by Strategy, that does nothing but issue debt and equity and invest the proceeds in Bitcoin. There's ostensibly a software business there, although it doesn't make any money. That company is now part of the NASDAQ, so people might be exposed to crypto whether or not they realize it. And you have, asset managers like Fidelity or 401k providers that are starting to offer crypto products as well. And so, as these bills make their way through Congress, and most of these are effectively giveaways to the crypto industry, it's going to further entwine crypto with the mainstream financial system. So the next FTX, and there will be another FTX. I mean, this industry has been prone to numerous boom and bust cycles. There's no reason to think that's going to go away. So the next time there is an FTX, it's probably not going to be isolated to just the crypto economy the way that FTX was. It's probably going to spread into the traditional financial system, and that is something that should worry us all.
I'm going to ask our director, Sheldon Osman, again for a 4-shot, if I can, of all 4 guests, because I would like to, thank you, I would like by a show of hands to see how many of you 4 hold cryptocurrency in your personal lives. Show of hands, please. Anybody? Nobody?
Can't confirm or deny.
Okay, what does that mean, Tanya?
My client has no further comment. I'm like Molly. I could be anywhere. We don't know.
Now that to me,
I hold a very, very small amount for research purposes, but I am not invested.
As do I.
Okay. Well, I find that interesting. Why? Maybe you could help us with this, Tanya. Go ahead. Why would people want this? Not just for research purposes, but ultimately as an alternative way of doing business in the United States. Why do they want it?
Look, we already live in a digital cash world, not just in the United States, but around the world. I see it as another alternative to the fact that sometimes I handle physical cash, sometimes I'm sending Venmo, sometimes it's a wire, sometimes I have to transfer my dollar into some other foreign currency, and crypto generally, again, there are thousands of types, so they're certainly not a monolith. Bitcoin is very different from ETH, which is very different from XRP, which is very different from a stable, which is very different from a central bank digital currency. But writ large, this is not a matter at this point of if, but the reality that it is, and how can people, if they choose to, and with the right information and the right support, enter into the space safely, legally, and confidently. And that takes on a new level because, quite frankly, we're using most of existing technologies from Web 2.0, when you think about the internet, peer-to-peer file sharing, now using, and certainly consensus protocols and cryptography, the encryption method, not just to exchange information, but now value. That is what it is. And my concern is always that the haves, not only in terms of finances, but also information, will carve out this territory and everyone else won't even know what hit them.
Okay, Tanya Evans, I know you've got a heart out on this and you've got to go off and do something else. So let me take this moment to thank you for joining us on TVO tonight and contributing to our discussion. And we'll now allow you to go off and do whatever else you have to do. And I'll follow up with Molly White by saying, by asking the question, is there a way, I mean, we've heard all of the pitfalls that you've all mentioned, and we've also heard about how you all think the system could be improved. Is there a way, Molly, to actually do this in a way that protects consumers while respecting all of those desires for innovation and alternatives that have been discussed already?
Absolutely. I mean, I think that, the regulations that we were seeing, imposed on these companies previously during the past administration were not nearly as onerous as the crypto industry liked to claim. These were fairly bog standard securities laws that hundreds, thousands of companies comply with no problems. And the crypto industry was claiming that they were unable to comply with these regulations, that it would put them out of business, which I think is a very concerning statement to hear from any sort of company, that they cannot comply with even the most basic regulations without it ruining their business. So I think that a lot of the rhetoric around crypto regulation has been completely exaggerated by the crypto industry because they want to avoid regulations and, make larger profits as a result. But, it would not be difficult to have reasonable oversight of crypto companies, to require transparency so that consumers know what they're getting into when they make financial decisions, and to impose basic degrees of consumer protection on these companies so that they are not blatantly taking advantage of their customers. These are very, very basic requirements, and it is frankly shocking that the crypto industry claims that this is impossible for them to do.
Richard Painter, we're down to our last minute here, but the obvious last question is, if Congress is bought and paid for by this industry, what hope do any of us have to see any of these consumer protections go forward?
I think the voters need to come out and make it clear they are going to hold politicians accountable for what's going on. And every time I hear about innovation in finance, I wonder what's going on. We went through all that in the 1990s and the glorification of securities-based swap agreements and fancy this, that, and the other thing on Wall Street. We need innovation in pharmaceuticals, in energy, in industry, in agriculture. There are a lot of places we need innovation. A lot of innovation in finance has historically led to fraud. And this is what happened with securities-based swap agreements under the Clinton administration when Larry Summers, the Treasury Secretary at the end there, didn't see a derivative he didn't like. And then the Bush administration failed to regulate. And now we see with crypto the same thing, and this phony effective altruism philosophy being pushed by the Bankman-Fried family and others that bought in, got a lot of liberals on board, and now they veer to the right and they get the Trumpers on board as well. So Donald Trump has changed his posture toward cryptocurrency while he's, of course, investing in it. And this is how politicians feed a bubble. And it's been happening over and over again. We don't study history. We don't learn from history, whether it's 2008 or 1929. We're going all the way back to 1720 when they had the South Sea bubble in the Parliament. They were all buying and selling the stock and passing bills to help that company. It was a complete fraud, whole phony, and it collapsed in 1720, created an economic crisis in Great Britain. We don't learn from history, so we repeat history. If that's what people want to do, is they want to repeat 2008, and go through another great recession or maybe a depression when you throw in a trade war with Canada and all of our allies. That's what's going on right now. We're repeating the 1930s Smoot-Hawley trade war.
Well, I can assure you, Richard, I can assure you.
We repeat history or we don't.
I can assure you nobody in Canada loves this trade war, and I don't think we have any more affection for the 2008 Great Recession. But Lee Reiner, same last question to you. Namely, how do we make any progress on this if, in fact, most of Congress is bought and paid for by the industry?
I mean, it's a good question, Steve. I wish I had a better answer for you. I mean, unfortunately, I'm a bit of a cynic. I mean, I've been at this for, the better part of a decade now. And the truth is that, no one gets paid to be a crypto skeptic. No politician is going to get campaign contributions for standing up to the crypto industry. There's no one going to vote against them. I mean, I certainly share Richard's wish that voters become more educated and aware, but they have busy lives and why would they care about something that doesn't impact their day to day at all? So look, I don't think the story is going to end well. It's just a matter of, when the tide turns, and hopefully the damage will be rather limited. I think the longer this goes on, the greater the risk becomes. But the political calculus will change, just like it changed after FTX. There was a narrow window of opportunity to get meaningful reform done. We failed to do it. Congress failed to do it. And I guess if we're going to end on one note of sort of hope and optimism, look, we have a federal system of government here in the U.S. The states still have a role. We have state blue sky laws, state securities laws. Historically, states have been on the front lines when it comes to consumer and investor protection, and I think maybe that's where the action lies now. We just saw the Oregon State Attorney General file a lawsuit against Coinbase, the largest crypto platform here in the U.S. The lawsuit was very similar to one that the SEC had filed a few years ago, in which the Trump administration dismissed. So maybe that's a harbinger of things to come, that states are going to step into the void here now that the federal government has decided that, when it comes to crypto, and not only are they not going to regulate it, but they're going to be, the main cheerleader for crypto.
Understood. Richard Painter from the University of Minnesota, Molly White, the independent crypto researcher, Lee Reiners, Duke University. We're really grateful to the three of you, plus Tanya Evans, whom we had earlier from Pennsylvania State University, for joining us on TVO tonight. Many thanks.
Thank you.
And that is the agenda for Tuesday, May 6, 2025. Tomorrow on the program, we look at whether fighting in hockey is making a comeback. Hope you'll join us for that. I'm Steve Paikin. Thanks for watching TVO, for joining us online at tvo.org, and we'll see you again tomorrow.